Indians are very fond of gold. Gold touched 34,000 per 10 grams, sir. What do you see as the reasons for this sudden rise in the prices?
Well, this is not just a sudden rise. In fact, this is I think the historical rise. Never in the past in the history of India, gold was priced so high. So gold, from a milkman's wedding to the crown of the queen, gold users are ubiquitous. So gold is an investment, and gold is as an ornamental, religious, cultural and social value in India. So therefore, price of gold is certainly a matter of interest for ordinary Indians. In fact, Indians and Chinese are so fond of gold. They are world's largest consumers of gold are in India and China.
Yeah.
So there are several international factors that contribute to the rising price of gold. One is there is a global uncertainties in the world economy. So you are seeing the shutdown in the United States. There is an uncertainty in the Gulf region. The global oil prices are uncertain. So there are all-round uncertainties in the global economy. The character of the gold is whenever there is uncertainty in the economy, the surplus income takes the shape of the gold, because gold is considered as a safe haven in the age of uncertainty. So the first reason for the rising demand for gold is the global uncertainty. Second reason is we are witnessing the China-United States trade war. So China-US trade war has a serious negative impact on the global economy, because China is one of the largest consumers of many things. Look at, in fact, 30 to 40% of the global steel production, global coal production, global cement production, all is consumed by China. So when Chinese economy suffers, the world economy suffers. So the China-US trade war is going to dampen the global economic output. So when global economic output shows a decelerating trend, there is a growing demand for gold. We will see in our own lives also. When people are not certain, or when people are not hopeful about the future of their economy, their income, their family economy, they resort to buying gold because they think that the gold can easily be disposed of. Gold is a liquid asset. The word liquid means in economics where you can immediately convert it to cash. Yeah. Somebody may get a doubt where gold is a solid metal. How can you say it's a liquid? But liquidity in finance language is ability to convert it into cash. So gold is a highly liquid metal, so you can easily convert it into cash. So therefore, normally when global output is affected, there will be a higher demand for gold. That is another important. The third is when economy is showing decelerating trends, there will be tightening of the monetary policy. Monetary policy means the central bank of any country regulates the extent of money supply in the economy. So when money supply is tightened, then obviously it results in a lesser growth. So it's a vicious circuit. Lesser growth results in tightening monetary policy. Tightening monetary policy will further strangulate the growth. So when this tightening of the monetary policy is also resulting in a higher demand for gold. Then there is an important factor about value of the currency. The currencies of India and other emerging economies are depreciating when compared to gold. Today you are telling 34,000. A few days back it was 32,000. 2-3 months back it was 30,000. What does it mean? It means the value of rupee in comparison with gold is depreciating. Yeah. So when the value of a currency depreciates in comparison with the gold, then the surplus incomes gets into gold market. The reason is, again, if you keep in terms of cash, my value of my cash is coming down. So let me keep it in the form of gold. Okay. So people convert the cash reserves, cash deposits into gold stocks. So that is one reason why the gold is increasing. There are other two reasons. The stock markets are volatile. So people, when you and me have some savings, what will we do? We will buy land, or we will keep it in the form of bank deposit. We will buy gold, or we will keep it in the stocks or mutual funds. What is happening today is cash deposits, bank deposits are yielding very less interest. So where should you keep? Mutual funds and even stock market is highly volatile. Till August, if you have invested in the mutual funds, till August, mutual funds were giving a positive rate of return. From September onwards, mutual funds turned negative. So obviously when stock markets are volatile, people have no other investment options except to go to gold. finally the gold supply is also affected. Why was gold supply affected? Since 2012, there has been a slump in the gold prices.
Okay.
When there is a slump in the gold prices, gold mining becomes unremunerative. When gold mining becomes unremunerative, capital expenditure into the gold mining declined. Capital expenditure means expenditure towards expansion of gold mines or digging new gold mines. So gold miners started investing less and less on production of gold, on mining of gold. So therefore the gold supply has come down. So the point is, gold has three sources of supply. One, mined gold coming from the gold mine, that is the fresh gold. Second, gold released by the central banks. Three, recycled gold. Suppose you have a chain or a bracelet, you give it and get cash or get some other form of commodity. That's called recycled gold. What happened is, mined gold has come down production because there has not been fresh investment into gold mining because of the slump in the gold prices. The central banks were not releasing gold reserves, they are actually piling up gold reserves. Why they were piling up gold reserves? Because of uncertainties in the economy, currency depreciation. So they are increasing the gold stocks rather than offloading them. Then the only source of gold supply is the recycled gold.
Yeah.
So when the two other supplies of gold dry up, obviously there will be a supply crunch. So there is a supply crunch and demand increase, and that led to the higher prices of gold.